Today I'm covering the half-year update from Cakebox through to the end of September 2021. Obviously the full year is finished, but we won't see the full year results till later in the year. So it's really been an outstanding 6 months. Cakebox are now up to 174 stores across the UK, and have increased that, including 20 new stores that have opened through franchisees. And there's a further 63 franchisees or sites in the pipeline. This is an amazing rate of growth for this business. And as a bonus to that, Asda have started a rollout of kiosk type locations. So it's basically like a section within the supermarket that they use for things like pizza and different things in the past. They're putting in Cakebox units. So that's fantastic news. In terms of the figures, they don't really like showing you the full presentation thing, so I'll give you a summary. Everything is up, and it's up a long way as well. So what I've done to give you some idea, we'll take a quick look at Simply Wall Street's little valuation first. They're valuing it at $5.40 a share. We saw a high price in the year at about $4.40, and it dropped down to about the $1.50 mark, which I did pick up some extra shares, and I will be honest, I'm very biased in this one. So Simply Wall Street are putting it as heavily undervalued at the present time. What I've done within my calculator figures is I've taken the results and I've tapped them into my my spreadsheet. So I sort of doubled the half-year figures to give me a full-year figure to then start to do some calculations from there. Now, if I was going to look at a company's profile, compared to some of the duff ones I do get to look at, this one is absolutely superb. This is textbook, isn't it? Look at that turnover growth, very consistent year on year. And even with Rain and Rona, okay, it dropped down a little bit, but boom, we're projecting to be way back on track. Gross profit, beautifully in line with that. Net profit, nice and consistent and growing as well. Everything is in the black. Absolutely superb. I think they've really cracked the business model with this one. Assets versus liabilities. Obviously, I'm taking a guesstimate at this point at the moment with the 2022 figures, so you need to take things with a little bit of a pinch of salt. But here we go. Debt to equity is looking quite healthy for what is still a relatively young PLC business. Obviously, been trading for some time as a private company, but even so, everything is very well and truly under control here. Capital expenditure, again, I've got a full figures. We've just taken a guesstimate in that. But I would say that's going to probably stay fairly steady now. The factory sites and distribution sites are set up for the present amount of capacity, and probably with some spare capacity in them as well, so that we might be all right on capital expenditure for a little while within the core parts of business for the manufacturing side. And free cash flow, again, nice and healthy, really. So I'm looking forward to seeing the full year figures, but we are going to have to wait a few months for that. But let's have a look when I tap those guesstimated full years as figures into my DCF calculators and just see what we come up with. So I took a growth rate really at 30% per annum because I think that's actually conservative at the rate they're going. Simply Wall Street seems to think the growth rate was probably sort of half that sort of figure maximum. But the rate the franchisees are coming on board and everything, I really think they've been very optimistic in that one. So even at 30%, I think I'm optimistic it's a growth rate at the present time. But under optimistic, it really is. My apologies. Okay, so in terms of DCF calculator valuation, intrinsic value sitting there at £3.22 a share with a current price at $2.15. So anything bought at the 150 mark and under, absolute bargain. So that looks extremely healthy. So they are paying. It's a great business because this is a growth business. This is a value stock because it's growing nice and consistently there, and it's producing a dividend as well. So with Graham Intrinsic formula at 7.5 pence EPS, that's projecting a pricing of, wait for this, £4.51. just absolutely amazing. Absolutely amazing. So, okay, it's a guesstimated figure, so it means I think on my sums here that Cakebox is still very heavily undervalued at the present time. And that's only really looking forward over the next sort of 12 months. So what this is likely to be If the rate of franchisees coming on board and the expansion rate continues, giving that price in 5 or 10 years' time, I think that's going to be a real winner. But that's personal opinion. You need to do your own due diligence and express your opinions down in the comment box below. And we'll catch up with you again soon.